Hello crypto traders. Today we will talk about Cardano and Bitosin price prediction. Cardano, ADA, price is rising and looks poised to close out January in green. The only major issue or caveat to this is that it is currently outpacing price action on a wider time frame. Whether or not this is the case for two massive bearish peaks is with so little underlying trading volume, it is debatable whether this rally is as strong and supported as many traders think it is. Cardano price ends the losing streak that started last August. Factors that sparked the steady sell-off were staggeringly high global inflation and harsh central bank rhetoric that this inflation would not go away without hurting the underlying economy. As it went down, the market rose somewhat preemptively, based on the idea that inflation would decline linearly towards 2%. ADA price volume has not returned to normal trading levels since 2018. A rise of this magnitude at such a small volume could snap at the slightest shock, as the rise is based on loose screws. Indicates a possibility. For example, inflation will rise sharply instead of falling. Traders should be aware of the large caps of $0.38440 and the Cardano price rising near the middle horizontal level with a red downtrend line. Any further rally will require broad support from central banks. Inflation will continue to fall, and so will geopolitical risks decrease significantly. If the volume continues to increase, February and he grows in March, and crosses the level again in May 2022, then it's safe to assume that something significant has changed. The upside is bought more widely and with more volume behind it, it can withstand market turmoil. Volume buffers are better able to absorb market shocks and target prices to reach in 2023. As the next level at $1.54, it can more easily push the price action above 84 cents. Bitcoin price shows lack of momentum after explosive movements over the past 3 weeks. Week 4 was relatively calm, with less erratic activity. Once BTC consolidates, other altcoins will congregate left and right, generating huge profits. Bitcoin's price is up 45% over the past 4 weeks, the most volatile move in his first 3 weeks. Despite a consolidation structure over the last few days, BTC looks bullish from a long-term perspective. The rally pushed BTC to a new high above the November 5 high near $21,400. However, the last high leading to a low was $25,205 formed on August 14. Therefore, a high above this level further confirms the start of a new uptrend. Until then, it's quite possible that Bitcoin's price will return to critical support levels, but if sellers unite, this move could turn into selling. Important too. The 3-day chart shows that the immediate support level is at the $21,481 barrier, above which is the 2023 point of control, POC, the highest trading volume in 2023. If those levels fail, the buyer could enter POC 2022 at $19,250. These 3 support levels are important accumulation zones from a technical standpoint. This pullback thesis is backed up by his 30-day market value to realization value, MVRV, of the Bitcoin price. This index is used to calculate an investor's average profit and loss. Currently, the MVRV is around 16%, which is the average profit for addresses that bought BTC in the last month. According to historical data, Bitcoin price forms localized spikes when the 30-day MVRV is in the 12% to 21% zone. Market participants should therefore be cautious, as these in-the-money investors may sell their holdings for a profit. Retracements to support levels of $19,250 or above are good places to accumulate. Jumps from these barriers mark the next significant zone where Bitcoin price stretches from $28,000 to $30,000. Could cause a surge in buying pressure to push. Above these levels, $31,840, the midpoint of the 67% plunge from March to November 2022, will be the key level. QCP Capital, a Singapore-based crypto trading firm, said the market is sending signals to the Fed that negotiations are cheap, following the February 14 Consumer Price Index, CPI, release. Said to be very important. The Federal Reserve uses CPI and non-farm payrolls to estimate inflation and aims to keep it at around 2% of its target. When inflation is high, the Fed raises and lowers interest rates, encouraging people to save instead of borrowing and spending. The Fed's inflation no-cast model predicts CPI at 0.6% m/m. This is a significant increase in inflation compared to last month's 0.3%. QCP Capital said the forecast could be a perfect curveball for the market's bullish view on inflation. It's time to revise that forecast and lower inflation, but investors need to be cautious. If this number doesn't go down, it would justify a big interest rate hike by the Federal Reserve, and the US dollar would appreciate. A strong dollar will sell risky assets such as stocks and cryptocurrencies. Therefore, a higher monthly CPI for him could significantly increase downward pressure on the Bitcoin price. Alternatively, predicting a higher CPI ahead of time could catalyze a trend reversal in the cryptocurrency ecosystem, which has already enjoyed a 4-week uptrend. Bitcoin's price is likely to fall, but the bullish outlook remains strong as selling pressure surges and BTC pushes his 3-day or weekly candlestick closer to his $19,250. Will be sluggish. In such a case, Bitcoin price can target the same lows and sell liquidity below $15,443.